during the bull market, we tend to get an increased amount of newbies into the community, and an element of those new members have somewhat existing trading knowledge, okay, whether they've done a course in the past or they've done it themselves or whatever. And we tend to see conflicting or different trading styles coming in, and it tends to confuse some people. And I just want to share my methodology and why I do what I do, because I've spent the last 20 years dicking around with pretty much every indicator you can think of. Pretty much the first 6 years of my trading career, I was skipping and hopping between one indicator to the next, trading strategy to the next. I didn't really understand, why you needed to apply the right market indicator to the correct market condition. For example, if you're looking at an oscillator, RSI, stochastics, all that sort of stuff, CCI, these oscillators are great in ranging markets, okay? Ranging markets. When you have a market that's going sideways, oscillators are great because it shows you overbought, oversold areas. But they are the first things to kick you in the gonads when the market goes from a ranging into a trending market, because it's going to tell you to do the wrong things. So here's a prime example of what every newbie does. They'll watch some YouTuber talking how RSI, stochastics, whatever is amazing, and and I know this firsthand because I did it myself, 15 odd years ago. So the market could be doing something like this, and so it's obviously operating within some sort of range. So if you had some sort of indicator like this, and it's saying, right, sell here, buy here, sell here, buy here, you're going to be printing money, it feels, because this oscillator, MACD, moving average crossover, convergence, divergence, the MACD, that's another oscillator, is going to be great until this happens. So it gets, right. So let's try and, okay. You'll see this, and it's the bottom of the range, and this is saying it's oversold, and so you now need to buy. So this would be a good buy signal, and you're like, oh yeah, this is a good buy signal. And then what happens is you buy, and then this goes, and so this then starts, sort of going sideways a bit, and then you'll have the inevitable pullback. So actually, yeah, this, it gets back to here. This oscillator, oh dear Lord. This oscillator's gone up a little bit, and you're thinking, okay, yep, so it's just a fake out, I'm going long again. But the market then just does this, because guess what? This is a Kobo, isn't it? And so this then just sort of effectively dies, and then you enter some sort of, bear market. And then this oscillator will go up a little bit, and all of a sudden, people that don't understand that oscillators in ranging markets, oscillators in trending markets are pants, they'll keep on getting burned and burned and burned and burned. So you've got to know which indicator to use in the correct market condition. Whereas most people, they'll apply their fancy indicator to all market conditions. This is why I don't use any indicators whatsoever, because indicators are a crutch. They tend to be a crutch to prop you up to mitigate your own knowledge deficit of price action. Obviously, that's a bit of a mouthful. I guess, yeah, so mind you, I guess I could argue against what I just said there as well, but broadly speaking, the indicator is just a prop against your price action knowledge deficit. So you've got to get used to trading blank, empty, naked charts. And so nearly all of my charts will have nothing on them. Obviously, I've got these, this is just so I can see what things have fallen, how much things have gone up. But typically when I'm looking at a chart, there'll be naked, no indicators, and all I'm looking at are certain levels. That's it. I'm just drawing lines. And if you can get into the habit or well, yeah, the habit of looking at naked charts, you'll never have to rely on that crutch of an indicator, because indicators will always let you down at some point. And again, to argue against myself, so too will, support and resistance, S&R trading. But it's the thing that looks after you the most. Also, the other reason why I sort of have a very hands-off approach is that historically I've always been a business owner and trader, right? I've run businesses, so I'm very busy doing the businesses, and then I orchestrate my trading so it doesn't consume 5 hours a day, etc. And so I just learned over time that the more busy you make your trading, the more stressful it is, the more things that can go wrong, and so you gotta, so you got to have a more chilled out approach, which is what we do. So I don't day trade. The lowest I'll go on a chart is the 12-hour chart. I prefer the 12-hour and above. And you're looking for bigger swings. Now, obviously hindsight's great, and it's annoying. Well, it's not annoying. If anyone's been here for the last sort of 12 months, you would have seen me do some absolutely monumental swings, like getting in and out at perfect times with Casper and a few other bits and bobs, DNX, Claw, and and a few other things in the past. But if you've arrived in like the last couple of months, you've probably seen me go, "Oh, Siam, you absolutely missed this massive swing pivot over here." And yeah, I did. I've got to hold my hands up here. There are times where the charts were saying it looks pretty bearish, and I was just resting on the fundamentals, despite me doing many presentations saying that all the biggest trades I've ever lost is because I've put more weight on the fundamentals and ignored the charts. But in this point of the cycle, well, actually, one caveat here. If I wanted to sidestep, I really couldn't for Tau, because I would have moved the price down myself. And also, you got to know which part of the cycle to do your sidesteps in. So, of course, if you're in the red zone and you're in the bear market, what is going on? All my little price ranges have shifted right for some reason. I'm gonna have to. I'll tart this up later, but yeah. And anyway, so if you're in the red zone, yeah, of course. I tend to look at the charts and put more weight on price action there and looking for sidesteps, because you have a high probability that the sidestep will work well. But as we're entering crazy season in this green zone here, I don't really want to be doing too many sidesteps. If you go back 6 to 12 months, I was doing all sorts of or we as a community were doing sidestep after sidestep because we're in this choppy phase. But now I don't really want to be left out, with my pants down as Tau buggers off without me. So at the moment, I'm obsessed with my pot holding in terms of how much Tau do I own. I'm not worried about the price, because put it this way: if I'm that certain Tau is going to be, call it 2% of total market cap, I should be obsessed with how many Tau I own, not what price it is right now. And that's how I see things. So yeah, this little tumble is a 20% wobble, and this 20% wobble on Bitcoin has resulted in 20, 30, 50% wobbles on alts, which is absolutely normal. But just look at every bull market. Look at this one here. So the price action, this is almost an identical situation, folks. We had the halving, we had a massive run up. So in fact, look at this sideways choppy accumulation phase, right? Yes, it's choppy, but it sort of goes upwards, okay? It never really goes sideways for too long. It has a sideways base, and then it just buggers off. That is very similar to the sideways choppy phase that we've had right now. In fact, I can now actually move this orange zone up, because we had the halving and it was there. So it's just been angled up, the choppiness. And then we had halving and then some shenanigans. Well, look what happened here in this. We had halving after a big run up, or a nice diagonal run up, and then a 40% correction. The price action looks eerily similar, folks. Eerily similar. Now, obviously, the market cap of Bitcoin back then was way smaller, so the volatility is going to be bigger. Now it's a much more established global asset. You're not going to see a 40% correction now. So I genuinely think like a 20 to 25% correction is probably all we're going to see. Okay, I'm going to cop out here. 20 to 30% correction, 30% max. I can't really see it going below 50k, but something along here, and then we're off to the races. And I think it's going to be similar to this. And during this bull market, you're going to have to expect multiple, shit the bed type occasions. Here's a 34% crash, and then you have another. What is that? Another 34% correction. And then you have, what is that? A 38% correction. I'm going to labour the point here. A 40% correction in the middle of a bull market. And these corrections, these tree shakes are there just to get rid of the weak hands who don't deserve to be in this market. Minus 26%. Look at all these, and this is the weekly chart. No doubt you're going to have, if I went down onto the daily chart, a few more little wobbles. But this is to be fully expected, folks. So I don't want to see anyone in the community just, fumbling the bag at this point. I don't want anyone in the community going, Siam, I know I should have listened to you, but 6 months ago I sold everything and I've been sat in tether since. or something stupid like that. So this is my little strong suggestion. Just stick to the plan. Get your AI heavy pot set up right now whilst the prices are a gift to us, and sit on your hands until Q3, Q4 2025.